morning and welcome. Patriot Radio News Hour, Joe and Jason on a Friday. We have made it and, might as well just start with it. And a new all-time record high. It's been as high as 21. I'm going to round up a little bit. 21.93, 21.92.70 has been the high for gold today. Pretty close. Jason had been warning, hey, don't be surprised if we get $2,200 gold. And unfortunately, we're probably going to see significantly higher prices from here. A lot to talk about. Jay Powell finished his testimony in front of Congress yesterday. We had the State of the Union. I'll just say this, full disclosure, Jason watched none of it. I watched about 90 seconds of it, and that was all I could take. I couldn't take any more. But some interesting things, wanting to raise taxes, corporate taxes. Listen, I tell everybody, I'll let you in on a dirty little secret. Okay? We're all going to be paying more taxes real soon. You don't go $100 trillion in debt every 100 days. And not have to face the consequences of that. But I'll say this, Jason. We also had the bank facilities numbers out. On Monday, the bank facility, you can't borrow from it anymore. It actually ticked higher again this week. $165 billion in it. Big drawdown in the reverse repo facility, and the Fed heated up that, sold off some of the balance sheet again. The first few weeks of February they didn't sell anything, but they've been picking that back up as well. And then Donald Trump posted bond, a $91.6 million bond as he is appealing all of these cases. So a lot of things. There's no lack of things to talk about. The jobs number came out, and I'll just say this: no one believes it. There was an uptick in unemployment and massive revisions lower to the jobs in the previous month. I don't know what's going on. I really don't. Seeing all of these revisions, and they're not little ones. I mean, huge revisions. It just, something isn't right. It's hard to put your finger on it, but it's going to be a jam-packed show today. 800-951-0592. That is our toll-free number. Of course, allamericangold.com is the website. I will tell you right now, something worth listening to. Danielle Martino Booth, she was the second in command at the Dallas Federal Reserve when Richard Fisher was there as the head of the Dallas Fed. I encourage you, it's about 10 minutes. Listen to what she has to say, because she's just telling you what Jason and I have been telling you all along. They're not trying to save us. They're not trying to fight inflation. They're absolutely just trying to save their own system. And whoever, whatever individuals have to pay the price for it, so be it. But check it out at allamericangold.com and listen to it for yourself. But, here it is. We've been warning about March. We're in March. We're going to have a Fed meeting. Jay Powell yesterday said that, hey, that the Fed was close. So Wednesday, they were in no hurry to raise rates. Yesterday, Jay Powell said that the Fed, and I quote here, were not far from it to be appropriate to be dialed back the levels of restriction. So Jay Powell kind of saying yesterday, hey, you know what? We're not that far away from cutting rates. And I'm thinking, what data what are they really looking at, Jason? What could they possibly be looking at that tells them that they've done their job. Of course, then again, I don't think they really want to fight inflation to begin with.
Well, the population in America doesn't seem to be revolting heavily with the inflation we've already suffered. So I guess they feel like, okay, let's see if we can turn the heat up a little more and without revolt. Because people are still, I guess, fed, and they're still generally living in a home. So I guess they can just push the inflation. That's what it sounds like, Joe. I mean, we talked this morning. I do believe they'll try to lower the rates, but it might not. It's going to be closer to the election, and they're going to try to keep the markets looking really swell because they have more of a Powell in the Democrats than they do in the Republicans. So that's who they want. So I say that they don't raise rates; they keep it solid as long as they can, and then when we actually see something, we'll just say late in March, early April, suddenly, the market's dropping 10%, and then Jay Powell comes out, we're going to lower the rates. The inflation doesn't look so bad anymore. And then we'll have record high markets going into the election. And no matter who gets elected, what's going to happen after November, right, Joe? How bad do the markets seize up sometime in 2025?
The year of chaos for 2024, but really I think the pain doesn't come until after that, right? The real pain is going to be 2025 and beyond. But again, so we got a Fed meeting coming up. We expect them to start winding down the quantitative tightening. And now, according to Jay Powell yesterday, hey, we're not that far, and I think Jason's right. As soon as we have some bad days on the market, that'll be the card that comes out. Okay, well, we're going to start cutting interest rates. Stay with us. We're going to tell you all about the jobs. Is it real? I don't know. We'll find out. 800-951-0592. Joe and Jason, Patriot Radio News Hour on a Friday. A quick look at the markets. The Dow's up 97. The S&P's up 9. The Nasdaq's up 27. The 10-year note unchanged at 409. Crude oil's down today, 63 cents. The dollar's lower again. Gold, as we said, another all-time record high. Right now, gold's up $16, 21.82. Silver not playing today, but it's not down 9 cents at least for right now. $24.30. And Jason, we've been telling you, diversification here is going to be the key. It really is. This is going to be a crazy year, but the pain is going to come after the craziness is over. Check out our friends at YRefi. I think it's really a great place to put. You don't put all your money there. You don't put it all in gold, right? You don't. Everyone knows this stuff. But take part of that. If you got $50,000 or more, you get up to 10.25% fixed rates of return. You get your compounded daily. You can turn it on. You can turn your income on. You can use it like as an income source. I know a lot of listeners have started doing that, where they just kind of take that 10% every month, combined with their Social Security check, and they're like, hey, you know what? Yeah, it's kind of nice, right? And use it as income. You can compound it, right? Just leave it in there and let it grow. There's no fees. There's no penalties. If you need your money back early, they don't attack your principal. They don't do any of that kind of stuff. And it's not correlated to Wall Street or the Fed. Check them out, investyrefi.com, or just call them 888-YREFI24. Remember, got to have 50,000. Here's the good part, though. A lot of you got money, and you've got it in an IRA. No problem. You can use part of that to do it with YRefi as well. So call them, 888-YREFI24. But, Jason, remember yesterday I said, listen, we get a print, government jobs print with a 1, 100 and something thousand, we can easily see $2,000 gold. Well, we didn't, right? We got another one of these whopper numbers 275,000 jobs created, totally blowing everything away. But two big issues with that number. First, the unemployment rate, which was at 3.7%, jumped to 3.9. Now, it's still, listen, 3.9 is still good. But it's almost mathematically impossible to have 275,000 jobs created and have the unemployment rate go up like that. That's not how it works, right? Well, the other problem, January's number. Remember, in January, man, we had a huge number, 353,000. And I remember we were shaking our head that day, Jason, going, what is going on with these numbers? Well, they missed that. Apparently, they miscounted, right? So that happens. Things get revised, but you're expecting it to be in the ballpark. Maybe you're off by 5% or 10%. Now, they missed it by just a little bit, Jason. It wasn't 353,000. It was only 229,000. So they missed it by 35%. Apparently, they found a lot of extra people that I guess they didn't have a job. They thought they had a job, but apparently they didn't have a job. Then they did the same thing in December and lowered that thing. Matter of fact, December's number was below 200,000. So I just said, well, this is kind of what I think. When we get next month's number, which will also probably be something outrageously high, how much do you want to bet this February number gets revised down? I'm going to say that by next month, this number will have started with a 1. You know what I'm saying?
I think you're right. I don't think that's not really hard to predict with what's going on. So
I mean, these numbers are nuts.
I know, and these are lagging numbers to begin with, and then they have to revise them. So now the lagging numbers need to be false, and then they come up with an honest number sometime later when you're looking at the new lagging numbers. So yeah, there's things not being said, Joe. There are definitely things not being said.
Now remember, there's two surveys here, right? So you have the establishment survey, the Bureau of Labor Statistics. This is the ridiculous jobs, 275,000. Listen, I want it to be true. But remember what Challenger, and this is a February number, okay? Remember what Challenger Gray and Christmas said about February, that it was the largest announcements of planned layoffs for the month of February going all the way back to 2009, right? That doesn't add up. But then you have the household survey. It's kind of interesting because the household survey said, well, we didn't create 275,000 jobs. We actually lost 184,000 jobs. And you know what, Jason? I don't know if I can believe either of those numbers.
I don't believe any of the numbers anyways. I don't
believe in one.
Well, what's good about when Joe and I do the show is because I don't really believe the numbers. I mean, I believe the numbers that Joe is giving because he's got the conventional numbers. He's giving you what is being said.
What's reported, right? What they report, right?
I try not to blur the way I see how things are going with the numbers because if I go down that path, I'll start wondering, too much about why the numbers and what's the numbers and how are the numbers. Because I know right from its face, it's a rigged system, and so I love that Joe brings the numbers, and I can sit there and pick apart what I'm seeing that's not the numbers, because sometimes the numbers make a lot of sense. Sometimes the numbers, they want you to know the numbers, and when things start to blow up, they're going to really want you to see the numbers when they start blowing up. But before they blow up, they want things to be a certain way. They want you to think a certain way, and then when you're revising the incorrect numbers that are lagging. It's showing you, Joe, some things are getting ready to happen.
Yeah. Well, here's the good news. It's Friday. Let's talk some good news. Employees earned more. Ready? The average hourly earnings for all employees from the private non-farm payrolls edged up 5 cents an hour. There you go. That's right. Congratulations. You got a whole whopping 5 more cents an hour. No wonder why. Think about this. What the first time in a dozen years credit scores fell? They're now saying that almost 20% of people are at least 30 days late on at least one payment, right? All of those things kind of make sense. When an extra 5 cents is not going to help you deal with inflation. Some other good news, the work week, which has been falling, did tick up by 1/10 of an hour. It wasn't a big tick up, but at least it was up, right, Jason? I mean, that number's been falling. 34.3 hours worked. By the way, the second biggest employer, the government. The government has been on a tear, Jason, as far as adding in employees. Another 52,000 government workers added to the payrolls. The only thing that did better was healthcare. That was it.
Wow. Well, government. How many people are employed or their employment is important because of government? It's really the jobs numbers could come straight from the government. How many millions, 24 million directly working for the government, and another 50 million directly tied to the government. You got half the workforce is government. That shows you another way that things are not good. How can you well, I guess in a communist country everything's tied to the government. So I guess we should be looking at what the government's doing constantly, Joe, because obviously when corporations and small businesses are all crashing and burning, the government's just going to tax their. I mean, look at the post office.
Right. Yeah. So that kind of recaps the big jobs number. And then the FDIC, after the bell yesterday, said that it's, quote unquote here, it's confidential tally. Okay, so because, hey, we're the FDIC and we don't care about people. So we have what we call our confidential tally of banks that have what they call operational, financial, or managerial weakness. It grew by another 8 banks. The FDIC is now saying that there are 52 banks with financial, operational, or managerial weakness. Total assets of those firms increased by $12.8 billion last quarter to $66.3 billion. So I guess New York Community Bank wasn't on that list because, they got a whole lot more than that. But it is interesting. Don't you think they should tell you, hey, by the way, you may not know this, but the bank you're at, they're not so good. Maybe you want to move your money. No, because that's not where they're not here to protect us, Jason, at all. Now, it's funny because they say, well, it's the Federal Deposit Insurance Corporation, right? We're going to make sure your deposits are good.
They can only insure 250,000, right, Joe? FDIC.
That's it.
And
yep.
and we've told people, not a lot of people have over $250,000 sitting around, but we know people that have that much, and so they divide it between banks. But the FDIC will not be able to insure your funds if things go haywire in a major way. You cannot trust. I don't know. It's the same thing as we're still on the gold standard, Joe. People thinking the FDIC and your money is taken care of. It's just a false sense of security. It's just not. Every time I hear I hear the term FDIC, I just think, well, fraudulent insurance, right, Joe?
Yeah.
It's like when your house gets hit in a hurricane and the insurance company's like, well, we can't really pay for your house right now, and it does happen. Insurance companies will do everything they can not to pay you, and the FDIC will do the same if they're out of money.
Credit cards jumped to an all-time record high, and I'm talking about credit card balances. Just seems to never stop as more and more people are falling behind. The $8.4 billion increase, total revolving credit now $1.327 trillion. And you know what the funny part is? Is the interest on credit cards has now hit a new record high. 21.5% is now the new average rate on credit card balances. Are you kidding me? 21.5%. That's the average rate. I promise you, for all of you that have missed a payment, yeah, you're not paying 21.5%. That seems outrageous. Right? Hey, I've got an 800 credit score, and I had to carry a balance on this debt. And, oh, okay, well, no problem. No problem, Schmuckatelli. Hey, we'll just whack you for 21.5%. Yeah. How do you like it now? Well, guess what? It's only going to get worse. Patriot Radio News Hour. Joe and Jason will be back right after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Friday. Gold's up 19 now, 21.84. Again, new all-time record highs. Gold's been as high as 21.93 today. Silver coming back here, 24.30, just down about 5 cents right now on silver. And the next segment, I've got 3 different items. This is going to be, this may be how it is for a little while here. This is what's available that is what I dub to be decent pricing. Quantities are going to be limited. There's 3 different items, in talking with the wholesalers and the bullion banks out there. There's just not a lot out there. So, and again, that just, let's face it, five straight days of record highs. This is what is going to happen. So that's coming up next. So be ready. Be ready to dial. Yesterday we ran those Silver Eagles, sold out of those. That was a great opportunity. Today this is going to be on the gold side of things, and that's coming up in the next segment. Speaking of the FDIC, yes, they admitted, okay, we've got more problem banks. And they graded on a scale, by the way, so just so you know, of 1 to 5, 5 being the worst. The 4s and the 5s make this list. Well, what banks are on that list? Nobody knows, right? They won't tell you. It's a secret. Shh, it's a secret. But they exposed a lot of other things in Jay Powell's testimony, and I'm sure this probably had to do with New York Community Bank, saying, hey, what's going on with these banks, and can we actually trust what they're saying? Jay Powell's response was that they've reached out to banks. The Federal Reserve has reached out to banks that they believe have high levels of uninsured deposits. Now, that's easy to find out. Really easy. Like I said, with New York Community Bank as an example, it was only about 27% of their deposits were above the limit, if you will. High levels of office real estate debt. So saying that, hey, listen, we've reached out to both. And obviously, if you have both, a lot of uninsured deposits and a lot of office debt, you're in trouble, right? And he said that the Fed was examining whether they were, quote, being truthful to themselves. First of all, they need to be truthful to us. And isn't that your job? Isn't that the job of the FDIC, of the Federal Reserve, of the Office of the Comptroller of the Currency to make sure that these banks are being truthful? Isn't that, that's called oversight. The worry is now about such fire sales from banks, and that the banks' books are dramatically mispriced. I can guarantee you this is what's happening. And how can I say that? You know why I can say that? That bank lending facility, it was going up as early as the other day. These assets are mispriced. It's a lot worse than people think. And one major way to have turmoil, Jason, is eventually when you run out of rope. What's going to happen when the reverse repo facility is empty? What's going to happen? Some of this debt is going to get sold, and it is going to force a wholesale crash. We know this.
And the liquidity will get much worse. Things will get tighter. And this is when the markets will show a whole lot of stress. But, once again, the timing of it, right, Joe? And when will the Fed drop the rates to save it, right? That's the only play they're going to have when the reverse repo. And here's the thing. If they want money in the reverse repo, they just open it back up and put more money in it. They want this to happen. This is happening on a timed schedule. It's very obvious that they're timing this, Joe.
People are now saying, and I've said this, how long have I been telling you how weak Jay Powell is? I want to say this as well. Because, they're supposed to be about economic, the Fed, it's economics. Jay Powell's not an economist. Jay Powell's a lawyer, by the way, just so you know, right? He's not an economist. And I've told you this forever, how weak he is. And people are now, and a lot of people have been calling Jay Powell out about him being weak with these banks, allowing for these banks to continue to misprice these assets. And people are, calling for a leader at the Fed with the courage to stand up to banks. The FDIC is saying that bank incomes have plummeted. They have fallen another $30 billion. By the way, that was a 44% decline in incomes for banks from one quarter to the next. Higher non-interest expense for banks grew $26.6 billion. That was up 19%. And these are not good things. Lower non-interest income, right? Okay, well, lower income, that's not good. It fell by 9%. Higher provision expenses. These are what the banks are willing to admit are problems. That grew by 26.5%. And charge-offs, okay, we're not collecting anything. That increased 14 basis points from the quarter and 29 basis points higher from the year before. And the FDIC is estimating that the failure of SBV and Signature Bank, they got it wrong. Go figure. It was actually another 25% higher and is now going to cost over $20 billion. And then last but not least, commercial real estate delinquencies, the highest in over 10 years. Credit card delinquencies, oh man, the highest in 14 years. So, Jason, all of this from the FDIC just yesterday.
Right, and couple the credit card highest delinquency rate with also the highest amount of credit card debt. So it's still being piled on as we speak, Joe. Yeah. That's why the credit card rate went up. Credit card rate's going up because there's delinquencies now.
When we get back, get ready here. We're going to tell you what we got. We're going to give you quantities. We're going to give you price. Gold's now up 20. Silver getting ready to turn positive. We'll be back right after the break. 800-951-0592, Patriot Radio News Hour, Joe and Jason here on this Friday. Okay. First, I'm going to give you the first item, and we've got lots of it. Okay. 1/10 ounce American Gold Eagles. $275. If you buy 50 or more, $270. Everybody else, I'm shocked. 300 plus from the big online guys on 1/10 ounce American. I'm not shocked, really. I get it. They're hard to get. They're really popular right now. So $275 on 10th ounce American Gold Eagles. They come in rolls of 50. They're the size of a dime. If you buy 50 of them or more, you can buy more than 50 if you want. $270 or $13,500 for a roll. I've got 25 $5 Liberties. I don't have 26. I don't have 30. I don't have 50. I got 25. Save $20, $610 on 25 $5 Liberties. I've got 40 CU BU St. Gaudens. So what does that mean? Brilliant uncirculated, choice uncirculated, right? These are coins that you could probably get them to a grading service, and they, grade out like an MS60, MS61, but the cost of grading kind of doesn't make it worth it. Our regular Saints are $23.75. So you go up to the BUCU, they're $2,395. And these are $20 St. Gaudens. And I've got 40 of those. I have 40 Mint State 63 Saints. So think about BUCU right there, $23.95. So you got MS60, 61, 62, go 4 grades higher. I've got 40 MS63 Saints, and those are at $2,425. So those are the deals today. So 10th ounce Gold Eagles, $275. We're way cheaper than the big online guys. If you buy a roll, $270 a coin, that's 50 or more. $5 Liberties, these are the old, quarter ounce, 1866 to 1907 Liberties, $610. Got 25 of those. These BUCU Saints, $2,395. And I've got 40 of those. And then 40 Mint State 63 Saints at $2,425 at 800-951-0592. And right now your gold's up 20, Jason, $2,185.
Yeah, and Joe and I were talking before the show, Monday, the markets are going to open. And a lot of times people will buy metals and then it goes down the next day, and that could happen. But I think there's a very, very large possibility that gold goes up, and maybe even dramatically on Monday. So the 10th ounce Gold Eagles, for example, at $275, we could be looking at 300 and being the low guy on Monday. The $5 Liberty at 610 is insanely low. There's only 25 of those, so I would snap that fractional gold up as quickly as possible, because it just doesn't seem like $610 is a realistic price as gold keeps pushing. And then on the large gold pieces, Joe, all good deals straight across the board. But if you're a fractional guy, if you can only put a few $100s into this stuff, the 10th ounce gold or the $5 Liberty is there. And if you want to put a large amount, you're looking at Monday, 2,200 gold possibly. And if it does hit 2,200 on Monday, does it just start pushing towards 2,300? Because when these things go, sometimes they go very quickly, Joe.
Yeah, and we've been talking about when's gold going to stay above 2,000, and then, of course, we said in January, hey, gold's finally comfortable here. Gold's up $100 this week alone, and it doesn't look like There's a lot there to stop it right now, especially if you look at what the FDIC said, right? The bank's positioning is getting worse, not better. Yes, I guess New York Community Bank avoided the axe, but only because they got a huge bailout from private equity. How long will that continue? Right? That's not a. I think that's a good thing for It's a good thing for the market. It's just not something that you can really rely on. And now the realization that all of us should know, there's really no oversight. They pretty much take the bank's word for it, right? That's kind of like the wolf guarding the hen house and saying, "Oh, don't worry, I'm not going to eat your chickens. I promise, right? I'm not gonna." And that's just a bad way to be. But that's how it's designed. It's meant to do that, right? That's how it's meant to be. 800-951-0592. The largest wholesaler in the world now has calls, which means call us if you have them, because we don't. $2.50 Indians, $2.50 Liberties, $5 Liberties, $5 Indians, right? And every day it seems like this thing is growing and growing. And this is why you're probably going to see a lot more of what we're doing with these coins that are a little nicer looking or got a little higher grade, because the low end, Jason, those products are gone. They're just out of the market.
Has the feel that the premiums are getting ready to just skyrocket as gold is going up. So that doubles the price of gold as it's moving in this direction. So we've been saying in the last year, get it now, get it now, get it now. We're getting into you can still get it now, but it's going to be a lot more expensive if you wait. If you want to wait, go ahead. I wouldn't.
800-951-0592. Final segment here, Patriot Radio News Hour. And yeah, it's hard, right? Because you're like, gosh, there's got to be a pullback. There's got to be a pullback and waiting. I always tell everybody this, God's got a sense of humor. At least he does with me. If you don't buy today, I promise you it's going up the next day. And if you do, it's going to go down, right? And it's just how it is. But here's the thing. When we look at what's coming, just for the rest of March, we got a Fed meeting, which we know. Here's the one thing we know. They're definitely not raising rates. Right? We're supposed to get, we're going to stop or slow quantitative tightening, which is gold bullish. And an update, right? Hey, by the way, we're getting closer, right? Because that seems to be what Jay Powell said, to starting rate cuts. And again, whatever that is, Jason, that's another positive development for gold on top of the reverse repo. So there's so many bullish factors for gold in 2024. I don't think there's a bad time to get in. I really don't. 1/10 ounce American Gold Eagles, 1 through 49, $275, 50 or more, $270, 25 $5 Liberties. These are the older $20 or $5 gold pieces, 1866 to 1907. We only have 25. At $610, they're just simply gone, which means you got to go upgrades, right, to find them, which means you got to pay more of a premium. I've got 40 CUBU $20 St. Gaudens. So this is the grade, right before you get them encapsulated. $2,395. A regular Saint today's $2,375. So, that's a great deal. And then 40 mid-state 63 Saints at $24.25. Gold's now up $22. Okay, $21.87. Jason getting closer to that $2,200 level you were talking about earlier this week.
Yeah, and I get this question, regularly, not a lot, but I get a lot regularly. Do you buy gold and silver? Yes, we buy gold and silver. So if anyone's listening, if you're new and you haven't dealt with us, we will buy gold and silver. So, as the prices go up and the premiums start to go up, that makes it a little easier for us to give you a little more for it. And so keep that in mind. We got the metals programs. If you don't want to think about it, you call the 800 number, 800-951-0592, and you put a monthly amount in, and 4 times a year you pick up your metals. But you know what? If you buy gold and silver today, and for some reason it goes down on Monday, if the premiums keep going up, we had this happen during COVID, and gold went down today. Yeah, but the premiums went up, and when the gold price goes back up, then the premiums go with that, and it just never seems to go down, Joe.
That's a really good point. That happened a lot, where you'd have gold go down $10 and the premiums went up 20. Because it's all about availability, right? It just boils down to how much gold's really out there, and right now, Jason, what we're seeing is not a lot, right? We're seeing that there's not a lot of gold out there. Take the time, keep adding to your portfolios. Don't forget, too, you got your money in IRAs. We do gold and silver IRAs. We can help you do that as well. 800-951-0592. Jason and I, we're coming right back with the half-empty cup to wrap up the week.